Hello, this is Stephen Harris, the head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:06 a.m. Central Time, and I'm recording this in preparation for the market day of June the 15th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see just what happened in the Sunday night, Monday morning futures market. So we have a bit of weakness coming in, and at the time of this cut, all four broad market indices were down about the same, about 0.44%. The chatter I'm seeing seems to refer to Greece, but whatever the reason, bottom line is we're down, not huge by any measure, but we certainly are down a noticeable amount. Crude oil down more though, down 1.35%, down below $60. And you have the euro down about the same as the US broad market, 0.44%. The dollar slightly up, and gold down about 0.5%. And overseas action all down. China down about 2%, Hong Kong down 1.5%, Japan essentially scratched to slightly down, Germany down 1.57%, and United Kingdom down about 0.68%. In terms of macroeconomic reports for today, you have an orange flag report, capacity utilization rate, industrial production, and a market housing index report. That should be about it on the U.S. side. In terms of Tuesday, let's see here if there's anything on the U.S. We have building permits and housing starts. So if you've got anything in the housing sector, it could have some movement there especially. That's about it. So fairly quiet at the beginning of the week, as is typical. In terms of our current volatility, obviously, we had a little more action at the end of last week. In fact, Wednesday and Friday put in standard deviation moves in the S&P, and on Friday, 3 of the 4 indices were moving by at least one standard deviation. Short-term VIX is a 12.38, though overall our volatility has been decreasing in terms of 5-day ATR versus the 10-day. We're down even with those two moves. Let's see here if anything else of interest. In terms of IV percentiles, 26 on the Russell, 20, 31 on the Dow, all in the lower third of that range. So still very, very kind of tame as of now. Obviously, we've got a little bit of overnight action today. We'll see if that develops into something more. But certainly historically, we are in the lower realms right now. In terms of our regular daily report, fairly straightforward report today. Intermediate term phase opinion, phase 3, higher highs, higher lows. IBD status remains a confirmed uptrend. We do have a little bit of concern coming from the accumulation distribution on the S&P is an E, and the Nasdaq's a C+. GMI index is a perfect 6 out of 6. Our intermediate term market posture is bullish, though there is a little stick in the weeds with the Nasdaq is bearish. Also, I should mention S&P and Dow, while bullish, are both very, very weak in their ratings here at 38.3 and 27.6. Russell much more so. It's actually very bullish at 81.5. So it gives you a signal that it's okay to do short-term and intermediate-term bullish trades, and yet at the same time, this is not bet the farm kind of time. We continue to have this kind of market opinion and so forth that we are big picture bullish, and yet at the same time, we've just continually had so many of these kind of warnings of kind of really neutral kind of market conditions and these cautionary aspects, as we call them. Indeed, our hedge warning status is currently a 0+, normal with cautionary aspects. From a volatility base, The only really warning that's coming in is from that VIX daily squeeze that is back. It had come off and actually fired to the short side for one day, but then immediately went back into the daily squeeze. We still have this borderline with the distribution day count remaining at 4 for both the S&P and NASDAQ. And 2 of the 5 intermarket risk aversion indicators are still flagging as risk off. So we just, continue to have a struggle to get kind of a clean bull signal. Just doesn't seem to be in the cards for this market. In fact, we'll go take a quick look at the charts here. You see Friday's action, very negative, not helpful at all. But in the big picture, it's just middle of the range. And indeed, if we open down today, a few points, we might be making a run towards the bottom of the range. But remember, it's just that. It's within the range at this point. Now, it could develop into something more. And every time we get down to the bottom of the range, we get, our risk levels go up. But we also have to kind of keep in mind that it is just that, bottom of the range. On the Russell here, kind of a doji action on Friday, but again, just chopping around inside the range. You could certainly draw, range action, a big wide range, top and bottom, and you're just kind of in the middle of the range. You could also draw something of a channel with this recent action, and indeed the Russell's really done a lot of catch up of late. So let's see here. And if you're to draw this channel, you're just in the middle of the channel. So now the primary thing here, I think, is probably this range action. But if you're to stay with this channel, which is about 4 weeks into the development here, you're just in the middle of this channel. Now, if we were to break the bottom of this channel, that would still be above the bottom of the range, and that would certainly be kind of a warning sign that the Russell might be breaking down from its shorter intermediate term phase. And we would certainly want to watch that. And indeed, it's the Russell and the NASDAQ that we kind of take keys into just how bullish the market really is. And you see here with the NASDAQ, not very bullish at all. Just chopping around sideways, range action. And then the Dow, again, just kind of middle of the range, maybe getting down here to the lower part, especially with a weak open today, could be visiting the lower part of this range. But we'll have to see, does this actually threaten the bottom of the range and actually put in a significant swing low? Has not done that yet. We continue to watch transports, and this one, kind of like the Russell, you could draw a channel here where this one's going down, where the Russell's going up. And certainly Dow theorists don't find it helpful when transportations are so weak. Though I did see that study recently that seemed to argue that in recent years, the fact that the Dow Transportation Index is going down really has had no probable association with where the broad market's going. And it may be that there's so many other things going on today with transportation compared to what they were 100 years ago. This may no longer be the correlation that we once thought it was. In terms of correlations, we also continue to see the bonds, often marching in lockstep with the broad markets of late, the kind of opposite correlation that you expect. But bottom line is bonds continue to be breaking down and very, very weak, and certainly seem to be decoupling and unwinding in their action as people are starting to rotate out of this in anticipation of the Fed. Now remember, we have FOMC this week, so that could certainly put more volatility into this week and could put a real charge into the bond market and associated interest rate risk sectors such as utilities and the financials. So back to our daily guide. Special opinions, no changes here. VIX is still inside the acceptable window for option income strategies. Keep that volatility in mind. Covered call strategies, still cautiously bullish. Looking for a 3-to-2 distribution between in the money and out of the money strikes in these current conditions. And then finally, for put selling, you are in acceptable conditions, but use defined risk credit spreads and consider scaling in until the market has confirmed a breakout from the trading range. We are always at risk for breaking down into something with heavier risk when these conditions that we've been talking about are so weak and at best neutral. In terms of our relative rotation graph for the new week, we continue to see so much weak. Look at these big tails coming down. Only KRE, which is our regional banking, looking at all healthy and kind of growing in a favorable way. So just tough sledding there for the sectors. Indeed, sector-specific market postures. You might argue that financials and retail are holding up best, but all of these are frankly quite weak. And every time we turn around, we light up this thing with all reds and never seem to get anywhere. And when I say don't get anywhere, look at the 1 month here. There is very little positive here. Really only two sectors, financials and healthcare, that are up any modicum of decent return in the 1 month time frame, and a lot more red in the 1 day, 5 day, and 1 month time frames than any healthy market would paint to. So tough sledding there. In terms of top industry groups using the shadow trader methods, they have retail, internet, healthcare, biotech, and railroads. But I would back you up to these bigger pictures, and it's certainly a time to be quite cautious about the initiation of new positions. Our overall signal is saying that it's actually okay to take new bullish positions, both short-term and intermediate. But I would kind of put it all in context and roll the report up in sum and say, be very careful, take quick targets, keep risk levels well under control, position sizing well under control, as this market continues to have very poor returns on your capital until we get out into a better posture, a cleaner posture. It is, it's not just trade blindly and everything you put on comes back with a positive return. That is not this kind of market environment. Well, that's enough for today. If you find what you're getting here is helpful, we greatly appreciate you liking us on YouTube. If you got here through Twitter, retweet us to your trader followers. We greatly appreciate that. You can send feedback, of course, to support at falconglobaltraders.com. More information about how we actually apply these principles in our daily trading is available at this website. Performance matters. We're quite transparent. This is using a model position size. Disclaimers, as always. Hit the pause button if you need more time to review the disclaimers. And as always, we'll see you back tomorrow morning before the market open with the Falcon Global Market Preview. Thank you.